Okay, as we enter a whole new trading session, let's take a look at what the global handover was like, and that might give us an indication as to what is possible in our markets today. Beginning with the United States, stock closed lower yesterday. The grim outlook on the economy from the Fed July meeting minutes release what shook markets. Despite this though, just before we go any further, Apple hit a $2 trillion market cap yesterday, and that's possibly also one of the largest or major highlights coming out of the US market. Now, barring that, the S&P retraced from its record high, fell around 0.4%. The Dow also slid around 0.3%. The Nasdaq also slid around 0.6%, and that's what's different. Every time the indices have been slipping, the tech-heavy Nasdaq seems to outperform. Yesterday, that was not the case. It was in fact the largest loser among the benchmark indices. Now, the Fed specifically said that the crisis would hurt the economic activity, employment, and inflation in the near term. They also said in the long term it poses some serious risks to the economy. The fact that they also kept the rates unchanged last month at their meeting shows that they're still supportive and that the economy still needs a lot of help. So this is the first time we're actually hearing the Fed talk about the long-term implications of COVID rather than the near-term stimulus. And that might mark a major reversal in a trend that we've seen as far as global equity markets are concerned. Now, coming down to Asia, stocks dipped over here on the back of the Fed caution. Nikkei slipped 0.2, Topix slipped 0.2, South Korea's Kospi dipped 0.5, Australian S&P ASX 200 also dipped 0.53%. So across the board, Asia is looking very weak today, and China is going to announce its benchmark lending rate, so that's something that will keep the Chinese market in focus, and Indonesia and Malaysia closed for holidays today. Now, going down to Europe, Europe was taking cues from the day before. So yesterday, their markets actually closed higher. That's on Wednesday. The Pan-European Stock 600 actually rose 0.6%. The banking index here did really well, gaining 1.4%. Retail and utilities, however, dipped into the negative territory. One key thing out of Europe was Maersk, the second largest shipping firm, beat their second quarter estimates, but they did flag off weakness for the rest of this year. So that's how the major markets and some stocks performed. Let's go over to oil and gold. Oil rose slightly as inventories were declining. US inventories declined by around 1.6 million barrels. That's in a 1 week time frame I'm talking about. Fuel demand at the same time, however, was down 14% YOY. So at this stage, the inventory drop is slightly larger than the demand drop, and that's why prices are firm for now. Brent cooled off actually a little bit, 13 cents, but still $45 and very close to its couple-month high of $46 per barrel. And then you have WTI at $43 per barrel, so not too far behind. Coming to gold. Gold fell yesterday, which is also something we don't see too often. Once again, it fell below the $2,000 mark. This was on the back of a 5-session sell-off in the US dollar that we've now been talking about every morning. The dollar has been weak. And it paused yesterday. So we had sell-off in dollar that was helping gold. Yesterday there was a pause, and that's kind of caused gold to retreat. Spot was down to 1968 and futures were down to 1979 per ounce.